Over the last 2 years, quantum stocks didn't just climb, they exploded up hundreds to thousands of percent. Since we're in the early stages, the best part is that you don't have to guess which stocks are going to be the winners. And in this video, I'll be covering 4 of the best ETFs that give you exposure to quantum. So let's get into it. This video is for educational purposes only. This is not financial advice, and I'm not a financial advisor. All investments carry risks, so always be sure to do your own research. So what's quantum computing, and why are you suddenly hearing about it everywhere? It can get pretty complicated, so I'll keep it simple. A normal computer works through problems step by step, one at a time. But a quantum computer can explore a huge amount of possibilities or solutions to a problem at the same time. And in the future, quantum computers have the potential to solve certain problems in minutes or hours that would take the best computers of today hundreds of years to complete. This could lead to breakthroughs in a wide range of industries, like faster discovery of new medicines, advances in power and batteries, new materials, further AI development, and much more. In the past, quantum news didn't break the headlines much, but in recent years, you're starting to hear a lot more news coming from this industry. Recently, the US government committed over $2 billion to a handful of different quantum companies, and by that I mean purchasing shares. This highlights that the government sees that this technology is not only beneficial, but it has a commercial future and they want to be a part of it. Another recent headline is that Microsoft unveiled a brand new quantum chip, and they said that they expect a scalable quantum computer by 2029, which cuts the original timeline in half. So we'll just have to wait and see, but the race is on and the money is pouring in, so the companies that are leading here could win really big. And if you're looking to get in early, this is where these ETFs come into play. First up, we have wqtm, the Wisdom Tree Quantum Computing Fund. This fund tracks the Wisdom Tree Quantum Computing Index, which is one of the few peer play indexes here. To get into the index, a company has to be involved in quantum computing, and there's also some minimum size and trading requirements. But the key part is that every company gets scored on 2 things. First is a relevancy score that measures how important a company's quantum-related work is to the growth and development of quantum computing. Second is a purity classification that labels them as either pure, which means quantum is essentially their whole business, or diversified, which means they have multiple lines of businesses where one involves quantum computing activities. The higher the relevancy score is, and if a company is pure, then it'll be given a higher weight. So the more the company is quantum oriented, then the bigger its place in the fund. Individual stocks are capped at 15% weight, and the fund is rebalanced every single quarter. The fund has an expense ratio of 0.45%, so you're paying $45 yearly for every $10,000 invested. For the portfolio, wqtm currently has 47 holdings, and its top holdings are in companies like Rigetti, D-Wave, ionq, IBM, Inflection, and more. So you have 3 of the biggest quantum names up top, and then the more diversified big companies like IBM, Microsoft, and Amazon. For the sector exposure, technology makes up the majority, then communication, industrials, and consumer discretionary. Now, wqtm doesn't have much of a history since it was created in October 2025, but since then, it's had returns of 36%. So it's been moving up right from the get-go. wqtm is for investors that are looking for straight exposure to quantum and not quantum adjacent. Many other funds might lean more towards the chips or the other layers of the AI ecosystem, but this fund puts the pure quantum companies first. Now, the downside is that these pure quantum stocks are small and they're in their early stages, and for the most part, they're barely generating revenue. So that does mean that there's still a good amount of risk and opportunity for things to flip upside down. But wqtm is one of the few ETFs to give you direct exposure to quantum, and it's built around the companies that are racing to build out the technology. And for those investors who want maximum exposure to quantum, and you're okay with the risk and volatility that it can come with, then this is a fund to check out. Next up is qtum, the Defiance Quantum ETF. This fund tracks the Blue Star Machine Learning and Quantum Computing Index. The companies in this index must make at least 50% of their revenues or operating activities from developing quantum computing and machine learning technology. This includes developing and building quantum computers, linking them to traditional computers, developing machine learning hardware or software, the equipment for packaging advanced semiconductors, the production and or processing of raw materials used in quantum computing, and more. Also, there's a minimum market cap of $150 million for companies that have 50% or more revenues from machine learning, and a $100 million market cap if you have 50% or more from quantum computing. and the index is rebalanced and reconstituted twice a year, and it comes with an expense ratio of 0.40%, costing you $40 for every $10,000 invested. As for the portfolio, qtum currently has 87 holdings, with top names being Micron, Marvell, MediaTek, ARM, Intel, and Nokia. You can see the weights are pretty evenly spread, and there isn't a company that dominates. And the sector exposure leans mostly into technology, which is expected, along with industrials and communication. Something else I wanted to point out is that in the top holdings, you can see a variety of chip companies rather than pure quantum names. And that's because of the index's broader approach of quantum and machine learning. But that doesn't take away from the performance, where qtum has had 1-year returns of nearly 99%, and zooming out, it's had 5-year annual returns of 28.4% and annual returns of 28.1% since it was created in 2018. Hard to argue with these solid returns so far. What makes this fund stand out is its strategy and portfolio holdings. Unlike a pure quantum fund where it leans into the companies that are still in their early stages that aren't profitable, it holds more established companies that are generating revenue today. So you're still getting exposure to the quantum theme, but in a way that provides a stronger foundation. But this broad quantum approach means that you're going to have less exposure to those pure quantum funds since they make up a much smaller part of the portfolio. And this fund is just as much as an AI and semiconductor fund as a quantum fund. So you'll still have exposure to the theme, but in a more diluted way. Either way, qtum is for those investors that want broad exposure to the quantum theme without having to bet on the more riskier names. Now, this next one is different. chpx, the Global X AI Semiconductor and Quantum ETF. This fund tracks the Global X AI Semiconductor and Quantum Index, which invests in companies that are involved in AI semiconductor and quantum computing ecosystems. Companies in the index must pull at least 50% of their revenues from one or more of the following sub-themes. First is AI semiconductors, so companies that design or make GPUs, CPUs, and memory chips that train and run AI. Second is the compute system enablers, which deal with the engineering, architecture, and production of hardware and software systems. Third is data center infrastructure and equipment, which would deal with the cooling, power management, and other components and infrastructure. And last is the companies that are going to be primarily focused on quantum computing systems, so you see quantum is just a piece of the pie. The index also has stock cap limits in place of 10%, and the index is reconstituted and rebalanced twice a year. For the fees, chpx has an expense ratio of 0.50%, costing you $50 for every 10K invested. Moving to the portfolio makeup, chpx holds 38 stocks, which is led by Micron, Taiwan Semiconductor, Nvidia, Broadcom, ARM, and others. And if you look at the industry breakdown, semiconductors and semiconductor equipment make up the majority, then tech hardware and equipment, and software and services. From the top holdings, you can see that for this fund, AI semiconductors comes first, and then quantum comes second, as those stocks make up a smaller percentage of the fund. On to the performance, chpx is still new, but it had returns of around 104% since it was created in September 2025. Because this fund is built more around chip makers, it's provided a lot of upside, and that's because how hard the AI theme has been running. chpx is a less exposed way to play the quantum theme, but it still has some great potential. It leans more into the AI and AI infrastructure companies that are experiencing massive growth and generating solid revenues today, and it isn't betting on a future payoff. And quantum computers are going to be depending on the same semiconductor and infrastructure backbone that this fund holds. And I'd expect as the quantum stocks grow and the market caps become larger over time, they'll make up a bigger portion of this fund. The downside is pretty obvious, and that's that this fund is mostly a semiconductor fund. With quantum being one out of the 4 sub-themes that make up the index, your quantum exposure is going to be small. And if you want pure quantum exposure, it's going to give you the least exposure out of the bunch. But chpx is a great way to capture the growth in both the AI and quantum build-out with this tilt towards the semiconductor names. And if you're an investor that wants broader exposure to the AI theme that also has quantum as a bonus, then chpx is a fund to look more into. Fourth on this list is going to be qntm, the Van Eck Quantum Computing ETF. And it's important to mention that this is a European fund, so for those international investors, here's a solid option for you. So Quantum tracks the market vector Global Quantum Leaders Index, which invests in companies that are developing quantum computing technology, or are leaders in ownership and quantum computing related patents. Companies in the index need to generate at least 50% of their revenues or operating activity from quantum computing technology or services, or have at least 5 patents related to quantum computing technology. The second piece is pretty interesting since that means it's also capturing the companies that are building the IP, research, and real innovation before it shows up as revenue. And the index is pretty unique when it comes to choosing its 30 holdings. First, it picks the 15 largest companies with 50% or more revenue or activity in quantum computing. Then the rest of the companies are picked based on their number of patents, so these companies are also a nice chunk of the fund. The fund then has a 8% cap for quantum computing technology and 4% for the quantum computing patents. There's also some liquidity and size requirements, and the index is rebalanced every single quarter. For the cost, Quantum has an expense ratio of 0.55%, costing you $55 for every $10K invested. The portfolio of Quantum, as I mentioned, is made up of 30 holdings, with top holdings in companies like ionq, Intel, D-Wave, Infineon, Nokia, and more. So it definitely holds a nice amount of quantum names, along with some chip names and tech giants. The sector exposure is mostly tech, but it also has industrials, communications, and others. And you see a bit more of a mix here because some of the companies that the index pulls in are because of those quantum patents. This ETF is also pretty new, just passing a year old now, but it's had returns of just around 70.4% since it was created in May 2025. So some strong returns so far in its first year. The best part about this fund is that it's one of the most focused and concentrated quantum ETFs out of this group. And that's from its approach of capturing the true quantum companies and the innovators in the quantum space that might be skipped in other funds because of the revenue restrictions. The biggest trade-off is that this fund isn't for us US investors, but it would be nice to see Van Eck drop a US version someday. The second trade-off is that since this fund is a quantum-focused fund, it makes it a very concentrated tech fund. So other than a rough market, any negative news when it comes to technology, AI, and quantum will hurt the fund since that's what the fund is made up of. qntm is a solid, pure, quantum-focused fund that's built around the innovators and leaders in the industry. And for those European investors that want the most direct exposure to quantum, then this is definitely a fund to keep in mind. Now, one option that you can take is to skip the ETFs and get direct exposure to the names. After going through the list, you've seen that for the most part, these ETFs dilute some of the quantum exposure. And that's because they're likely holding semiconductor, AI infrastructure, and big tech names, so most of the pure play stocks end up making a smaller majority. So if you want direct exposure, some investors might look past the funds and hold the quantum stocks directly. This could be by holding some of the larger and more popular names that you see in these funds like ionq, Rigetti, and D-Wave. But on the flip side, these are smaller companies and they're much more speculative, so they'll have big swings up and down. And going this route means that you're willing to do the research and due diligence to better understand the industry and the companies, since you're taking on much more risk with that direct exposure. The other approach is also getting quantum exposure to the larger and more diversified companies like Microsoft, IBM, Nvidia, and others that are established and profitable companies that'll be big players in this space. And while these larger names won't have the same upside potential like 10xing in appreciation, they don't have the same high risk of the company failing. Before you decide to invest in quantum, there are a few things that you need to keep in mind. First is going to be high valuations. Over the past year, some of these stocks climbed by hundreds and even thousands of %, and prices like this are built on hope and promises, but not necessarily revenue and profits. Many of these peer-playing companies aren't making any money yet. So they're burning through cash, and in order to fund the work, it's common to raise money by selling new shares, which is called share dilution. So when this happens, the slice of the company that you own gets a little bit smaller. Second, and this one is easy to overlook, but there isn't a clear winner in sight. There's a variety of different ways to build a quantum computer, superconducting chips, trapped ions, photonics, neutral atoms, and more. No one knows which of these approaches are going to come out on top. So if you're betting on one company, you're likely betting on the technology that they use as being the winner. For this reason, holding an ETF can make much more sense since you aren't trying to figure out the best out of the bunch, especially since it's so early now and there aren't any obvious picks. Third would be the timeline on the quantum theme. A quantum computer that can reliably do real work is likely a few years away, and many of the companies are pointing to the end of the decade to really have something tangible, which means the prices today are already pricing in some level of expectations for the near future. And if the story moves a little bit slower than expected, we could see these stocks fall. And this brings me to the fourth point, which is volatility. A 20% price movement isn't crazy in this industry, especially if you're talking about individual stocks. We saw this with the recent announcement of the government's investment into Quantum. And since this is an early stage for Quantum, this volatility is going to remain for a while. So while the opportunity can be big, so can the risk. So be sure to be intentional with your portfolio when it comes to investing in quantum, and don't just try to gamble. Now, semiconductors and AI infrastructure are going to play a big role in the development of quantum. And I dive into some of the best AI and AI infrastructure ETFs that have some huge growth potential in this video here, or you can check out this video here where I get into the 6 best semiconductor ETFs. If you got some value from this video, be sure to tap that like button and subscribe for more content. I appreciate you watching, and I'll see you in the next one.